Welcome back to Outside Views EU. Today we're diving into a critical topic that impacts everyone in the Eurozone. The European Central Bank, or ECB, and its role in maintaining price stability. You might ask, why is this price stability so important? Well, it's simple. When prices rise too quickly, your purchasing power decreases. A lot have felt this in the last years. And suddenly your money buys less. And when prices fall too much, that's also a problem. Deflation can lead to a vicious cycle of less spending, less production, and higher unemployment. And this is where the European Central Bank steps in. Founded in 1998, the ECB has a clear primary objective: maintain price stability across the Eurozone. So what exactly does that mean? Price stability, according to the ECB, means keeping inflation at a target level close to but below 2%. But why 2%? Why not 0%? And the answer lies in economics, non-native speaker, sorry. A small amount of inflation encourages spending and investment, and people know that prices will rise slightly over time, so they are more likely to spend money today rather than hoard it. Too much inflation, though, can wreak havoc on the economy. That's why the ECB aims for this delicate balance. But how does the ECB actually achieve this? Well, the ECB has several powerful tools at its disposal. One of the most important is interest rates. When inflation is rising too fast, the ECB can increase interest rates, and this makes borrowing more expensive, which cools down spending and also cools down investment and ultimately slows inflation. Conversely, when inflation is too low, the ECB can cut interest rates, making borrowing cheaper and encouraging spending. And this then boosts demand and pushes inflation back up. But interest rates aren't the only tool in the ECB's arsenal. The ECB also engages in what's called open market operations. And this means buying or selling government bonds. When the ECB buys bonds, it injects money into the economy, which can stimulate spending and investment. And selling bonds, on the other hand, pulls money out of the economy, slowing things down when inflation is too high. And in more extreme circumstances, the ECB can also engage in quantitative easing, or QE. And this involves buying large amounts of financial assets to flood the market with liquidity and stimulate economic activity. It's a controversial measure, often used during crises, but it is a key part of the ECB's toolkit. Now, maintaining price stability in the Eurozone is no easy task. Remember, the Eurozone consists of 20 different countries, each with its own unique economy. What works for us here in Germany might not work for Portugal. But the ECB has to strike a balance that works for the entire Eurozone. And that's why the ECB is independent from political influence. It's able to make decisions that might not always be popular with governments, but are necessary for the health of the entire region. And one of the biggest challenges the ECB has faced recently was the global financial crisis of 2008. And the crisis led to a massive downturn in economic activity, and inflation plummeted. In response, the ECB cut interest rates to record lows and launched its first round of quantitative easing. And this wasn't without controversy. Critics argued that these measures would lead to runaway inflation down the road. But without these actions, the Eurozone's recovery could have been much slower. And then came the COVID-19 pandemic. Once again, the ECB had to act quickly to prevent a collapse in economic activity. It launched an even larger round of quantitative easing and introduced new emergency lending programs. And these measures helped stabilize the economy, but they've also reignited the debate about long-term inflation risks. As we look ahead, inflation is once again a major concern for the ECB. With supply chain disruptions, energy price spiking, and demand rebounding after the pandemic, inflationary pressures were building. And the ECB then faced a difficult balancing act. If they raised interest rates too quickly, they risked stifling the recovery. Act too slowly and inflation could spiral out of control. And that was the challenge of central banking. Making decisions with incomplete information and trying to predict the unpredictable. But whatever challenges lie ahead, the ECB's mandate remains clear. Maintain price stability for the good of the Eurozone. And we came quite well out of the inflation crisis that just happened. And in the end, it's not just about numbers and charts. Price stability affects all of us, from the prices we pay for groceries to the interest rates on our mortgages. The European Central Bank plays a crucial role in keeping our economy stable and our money reliable. That's why understanding what the ECB does and how it works is so important. It's about ensuring a stable future for the entire Eurozone. So thanks for watching Outside Views EU, and if you found this video helpful, make sure to subscribe and hit the like button. Stay informed and see you next time. The next video is already right here in the end screen.